Hello everyone, and welcome back to the channel where we demystify the mechanics of the market. Today, we're diving deep into fascinating microcap stock that has popped up on our hard-to-borrow screener, exhibiting some truly wild statistics. We're talking about NVVE, NV Holding Corp. Get ready to understand what makes a stock hard to borrow and what it could mean for traders. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. NV Holding Corp, trading as NVVE, operates in the consumer cyclical/specialty retail sector, although their core business is firmly rooted in green energy technology. Joe logo/stock chart with a tiny market cap of just $4.07 million, NV provides a commercial vehicle-to-grid, or V2G, technology platform across the United States, France, Japan, and Denmark. Essentially, their grid-integrated vehicle platform allows electric vehicle batteries to store and resell unused energy back to the grid. Looking at recent price action, NVVE has seen some extreme volatility. Today alone, the stock is down a staggering 58.2%. Over the last 5 days, it's done 33.78%, but zoom out to the last 30 days, and it's actually up 43.68%. Volume today stands at 1,190,230 shares, which is about 0.5x its 30-day average of 2,227,083 shares. What is cost to borrow and why it matters? Before we get into NVVE specifics, let's quickly explain cost to borrow or CTB. When you want to short sell a stock, you're essentially borrowing shares from someone else, selling them, and hoping to buy them back later at a lower price. The CTB is the annualized interest rate you pay to borrow those shares. It's a crucial indicator for potential short squeezes because a high CTB means there's high demand to short a stock, or, more often, a very limited supply of shares available to borrow. When the supply shrinks, the price to borrow skyrockets. These fees can easily exceed 100% annually, sometimes even reaching hundreds of percentage points, signaling extreme conditions. Why this stock is hard to borrow right now. Now, let's talk about NVVE. This stock didn't just appear on our screener by accident. It's showing some of the most extreme hard to borrow metrics we've seen recently. Highlight CTB. The current cost to borrow fee for NVVE is an astounding 774.9% annualized. Not only is that incredibly high, but the CTB momentum has surged by a colossal 443 percentage points over just the last 5 trading days. This rapid increase tells us that demand to short is intensifying while supply is evaporating. Speaking of supply, there are currently only 46 shares of NVVE available to borrow across major brokers. Yes, you heard that right, 46 shares against an estimated float of 7.5 million shares. Our internal composite squeeze score, which factors in CTB levels, momentum, shrinking supply, float size, volume, and technical setup, has NVVE at a very high 77.2 out of 100. This combination of factors is precisely what makes a stock hard to borrow. Squeeze mechanics explained. So, what does it mean when a stock like NVVE becomes this hard to borrow? It sets the stage for what's known as a short squeeze. Imagine short sellers are trapped. They borrowed shares at a low CTB, but now the fee is nearly 775% annually, and there are almost no shares left to borrow. If the stock price starts to move up, even a little, these short sellers face immense pressure. They're paying exorbitant daily fees, and if the stock keeps rising, their potential losses are unlimited. To close their short positions and stop the bleeding, they must buy back the shares they initially sold. With only 46 shares available to borrow in a 7.5 million share float, any significant buying pressure can trigger a chain reaction, forcing shorts to cover, driving the price even higher, and squeezing out more short positions. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have incredibly strong conviction and are willing to pay those exorbitant fees because they believe the stock will ultimately go much lower. Dilution risk check. An important factor to consider in any short squeeze thesis is dilution. New share offerings can flood the market, offsetting any buying pressure from short covers. For NVVE, our techs show no recent diluted SEC filings such as -1s, -3s, or 424 BS within the last 90 days. This means there isn't an immediate, obvious overhang of new shares waiting to hit the market and potentially negate any squeeze potential, which is a positive sign for the squeeze thesis. Recent reverse split watch. Another critical piece of context for NVVE is its recent reverse stock split. NVVE executed a 1/4-18 reverse split on July 6, 2026, just 10 days ago. A reverse split reduces the total number of outstanding shares and, in turn, often afloat, while resetting the share price higher. For microcap stocks like NVVE, a common historical pattern is a new volatility or even a price pop within approximately a month following a reverse split. While this is a trend observed in many microcap names, it's a pattern, not a guarantee, and should be watched with caution. Again, a quick reminder. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For NVVE going forward, traders should keep a close eye on the cost to borrow and, critically, the number of shares available to borrow. Any further reduction in available shares could escalate the pressure. Watch for increasing volume, especially on green days, signifying real buying interest rather than just short covering. Price action above key technical levels would also be a strong indicator. With today's relative volume at just 0.5x its average, a significant spike in buying volume could have an outsized impact given the extreme hard-to-borrow conditions. NVVE Holding Corp. NVVE presents a unique case study with its astronomical cost to borrow fees, extremely limited share availability, and recent reverse split. While these conditions create an environment ripe for volatility and potential short squeeze activity, remember the risks involved, especially with microcap stocks. Always conduct thorough due diligence. If you found this breakdown valuable, please give this video a like, subscribe for more in-depth analyses, and let us know your thoughts on NVVE or any other hard-to-borrow stocks in the comments below. We love hearing from you.